All About Stocks this week. The markets end on a flat note, but are they headed up or down? And what should your investment strategy be? Telecom stocks in focus this week. After the completion of that 2G spectrum auction, we'll tell you if you should be placing bets in this space. And our advisor Hemang has made a profit of 15% on his portfolio, outperforming the Nifty handsomely. We'll find out how he did it. Welcome to All About Stocks and thank you for tuning in. I'm so glad so many of you wrote in over the last 1 week, and we're going to try and answer as many of your questions as possible over the next half hour. We'll also try and figure out what our investment strategy should be in uncertain times like this. We'll find out what the telecom sector has in store, which of those stocks after that auction really has any value to add to your portfolio. And of course, we have Hemang portfolio on the show this week, one of our top performers, who's made 15% in this market, the one that we're complaining about. We're going to find out how he did it. Our email ID is at the bottom of your screen. Send in any question you have about your stocks. First, Ajay is here with an update on all of the action on Dalal Street this week while you were in the office. Ajay was tracking the markets for us. Ajay, take us through what happened in the markets and, of course, the highlights of that spectrum auction that we're so interested in.
Well, Faye, markets on a net basis have lost marginally this particular week, but broader markets have taken deeper cuts. But highlight of the week for markets was the volatility. It was extremely choppy, and on days we went below the 6,000 mark as well on the Nifty. Net we settled at 60.50, but the kind of volatility we've seen this particular week, it would have been extremely difficult for a trader to make money on either side. Investors, however, would have got some good entry opportunity in blue chip stocks and select blue chips on individual days. Well, the sentiment on China growth continues to remain very negative, and that has been a point which is simmering underneath and is causing a lot of jitteriness along the emerging market pack, and India was also getting affected by that. Cues from US also have not been particularly supportive, and that has been the major factors why emerging markets like India were trading under pressure this particular week. Result-based trading was pretty active because this was the last week of the third quarter earnings season. Now, of course, the lack of third quarter earnings going forward will be something which cues will be absent and traders will have to find new triggers to trade. But otherwise, net the earnings season has come to a wind with a better than estimated kind of performance this particular quarter. Well, pharma and power sectors were the worst this particular week, and some of the auto stocks were best performing for this particular week. Telecom stocks were also in focus because of the marathon spectrum bidding which happened, and there were concerns in the market that players would actually go very aggressive, which was actually not the case. So net they did not really bid very aggressively, that it doesn't make business sense, but the concerns were there, and hence telecom stocks have lost quite a bit of ground. In fact, CLSA on Friday came out with a buy report on Bharti, saying Bharti is the biggest beneficiary of the new spectrum bidding which has actually happened. So this particular area was witnessing some massive cuts during the week, but net it was a very ordinary kind of week for Indian equities.
All right, Ajay, thank you for that update. Joining us, like I promised you, Hemang, Senior Vice President at Sharekhan. Hemang, thank you so much for joining us. And I have a very basic question a lot of viewers have written in to ask us. If we look around and read all of the information about the markets and the analysis, it is very obvious nobody knows which way it's headed. You don't know if it's going to go up or down. There's the uncertainty about the elections. Everybody seems to be giving mixed responses. How would you convince a regular investor at a time like this to put any money in this market because it's so unsure?
Well, yes, what you're saying is right, that it's not been very encouraging looking at the markets, and broadly it's moving in a range, and the positive news flow is not that much. But clearly the way to look at the market is that don't look at the index all the time, because it might be moving in a particular manner because it's made up of 50 stocks or 30 stocks. But there are individual stocks within that basket which have given extremely good performances. And if you hold on to some of those good quality stocks in your portfolio, most likely your portfolio is likely to do better. Also, in the short run, we have seen that the markets have been volatile. So people who have been buying regularly, they also tend to get the advantage of the volatility because of the averaging cost advantage which is associated with volatility. So I think it's important that you don't lose confidence in the markets and have about 2 or 3 year kind of a horizon.
How important is this political outcome of the elections this year? What sort of a bearing will that have in our portfolio, and how much should we worry about what's going to happen in these elections?
It's going to be very critical because we've seen that in the last about 2 years or so, the essential reason why we've seen weakness in our markets and the economy is because of the lack of policy making or the initiative that the government should have taken, particularly with respect to investment cycle. So a large part of that is attributed to the political uncertainty, and we think that once you have some kind of a clarity emerging out of this election outcome, people will feel more confident if we have a stable government, of course, and the entire investment cycle could pick up. We've seen that the IIP number has actually slowed down, the inflation continues to remain at a high level, the currency has been an issue. So I think most of those issues are related to who the person is at the power and the kind of initiative he takes. So I think it would be an important event for the markets.
If we don't have a stable government?
If we don't have the stable government, then obviously the upside trigger would not be there. So we might move in a broad range of, let's say, about 5,500 to 7,000.
So it still makes sense then, in your mind, to continue to buy stocks, the right stocks, at a time like this?
Absolutely. I think we've seen the pain of last 4 years, and we've seen the bottom. So if we have an opportunity to buy the stocks in this time, definitely one should buy, because once you have a bull run, it's very difficult to buy. You can't chase the stocks if they are going up. So this is the time to actually buy for the smart investors.
So when you say right stocks, when we're seeing a bit of a turn in our market as well, people now moving away from consumer stocks, they're moving into maybe IT a little more. There's a focus on pharma a little bit as well. If you were to give us some advice on what we should be picking in this market at this time, what would that be?
Well, clearly it should be a diversified portfolio, because at a point of time it would be always tricky to take a call whether IT will perform or pharma will perform, or the beaten down banks and the capital goods will start performing. It's always going to be tricky. So for a retail investor, it's important that you have important sectors in your portfolio, the best stocks within that basket, and have a diversified portfolio.
The other thing we must talk about this week is Telecom. Now, shares of Bharti Airtel jumped 5%, Idea Cellular jumped 6%, as Reliance Jio did not win the 900 megahertz spectrum as was feared. Now, Ajay was telling us as well, a lot of the analysts say that the aggressive policy by Reliance Jio is a positive for the existing companies. Now, both Idea and Bharti have increased their debt levels substantially given the amount they had to spend during those auctions. If you take a look at Telecom right now, where do you see value?
Well, right now we think that because of this, response to the spectrum that we have seen, there is going to be some kind of a negative impact because of the higher capex that these companies will have to shell out. Also, importantly, maybe 2 quarters back, everyone was saying that there is going to be increase in the tariff, both 3G and 2G, both data and voice. But we have not seen most of these companies reporting good numbers. If you look at the performance of Idea and Bharti, we have not seen that kind of an improvement in the numbers. So we think that there is going to be some kind of a range-bound movement for the telecom space, at least in the next 1 or 2 quarters. So within this pack, we continue to like Idea. I think that has the clear advantage.
Also, with the introduction now of Reliance Jio, there will be competition, as we know Reliance likes to do, and there will be pressure on tariffs even further. So then how do we expect either of these companies to start turning those numbers around?
Well, there is going to be competitive intensity, but we think that at a certain price point, they would not want to go through that pain, because for 3G and all, we have already seen the rates becoming the lowest. So I don't think that there is going to be that kind of a pressure on the pricing.
All right. Okay. So what's your recommendation at this point? Hold on to Idea?
We think that Idea is relatively better placed, and even Bharti, once we have this clarity on the South African operations, would become attractive. It has already gone through this about 10-15% correction. So around 280 or thereabouts, Bharti also will become an attractive buy.
Well, Swapan has written in with his entire portfolio, and he tells us he's a long-term viewer. He wants to know if he should hold on to any of these stocks. 100 shares of Apollo Tyres bought at 111 rupees. It's been a strong outlook for the auto industry this year. What's your call on Apollo?
Well, it's doing pretty well. The operating numbers were very good. The rubber prices are on its way down, which is definitely great news. She can hold on to it with a target of 145.
All right. Motherson Sumi bought at 203 rupees. Remember, this stock was recommended by Paras Adenwala on the show a couple of weeks ago. What's your call? Do you agree with Paras that it's a strong stock we should have in our portfolio?
It's a high-quality company doing extremely well in terms of numbers. We have set a target of about 245. can easily hold on to it.
All right, hold on to that one as well. 100 shares of Muthoot Finance at 134 rupees. Now, we saw the management sounding a little more optimistic. The RBI has now allowed loan against gold to be increased from what was 65% against the value of gold to now 75%. That's a positive for the company. So where do you see the stock going forward?
Well, overall, we are not very comfortable with the quality of the management of some of these gold finance companies. So yes, in terms of the RBI increasing that limit to 75%, it would be definitely a bit of positive. But we think that there's not much of a scope for an upside. We have set a target of about 185 for the stock.
All right, 185 for that stock. 30 shares of Kane India bought at 334 rupees. Kane India ended the week at 322. There is a buyback window that's open. It's priced about 335. What's your call on Kane India? Hold on to it.
Very good quality company. Recent explorations have been quite positive, and we think that the rupee also works to their advantage, and the buyback definitely is a great news. So one can hold on to that with a target of 390 rupees.
All right, so that's your portfolio there. If you'd like to have your portfolio looked at, send it to us. Our email ID is at the bottom of your screen. Time for a quick break. When we come back, 2 stocks that you can buy right now for long-term returns. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Hemang is still with us, helping us build a strategy for our long-term stock portfolios. Now, Hemang has brought us 2 stocks that we can buy at these current levels that he thinks make sense in the long term. The first of those 2 stocks is Divis Lab. We just talked about Cipla some time ago, and you did talk about the fact that it's difficult to say the entire pharma sector is going to do well. Tell us why you've picked this particular stock and why it makes your list.
Well, clearly, this is one company which has zero debt and about 85% of the revenues coming from exports, and very high operating profit margin of about 40%. And recently their Visakhapatnam SEZ has become operational, which will contribute to their revenues and profitability going forward. And we think that in this kind of an environment where we are not sure about the growth, the margin, the debt related issues, this is one company that fits the bill on most of the parameters. And currently only about 15% of their capacity is operational, because there is going to be a ramp up in the next 3 or 4 quarters. And for 3 of the production blocks, US FDA has recently conducted inspection. So once that is through, there's going to be an incremental growth which is likely to come through. So we think that at current price, this makes a lot of sense.
What are your targets for this stock? And considering it's at an all-time high, or it's close to its all-time high at this point, how long will we have to hold on to it to achieve those targets?
I think we can look at a time frame of about 12 months, and we are looking at a target of about 1500 for the stock.
All right, 1500 on the stock. Let's talk about your second recommendation, and you recommend TVS Motors at this point. And the interesting thing about TVS Motors is that every time we talk about auto right now, or two-wheeler stocks in particular, we're always talking about Bajaj, and we're talking about we're talking about Hero MotoCorp. Nobody ever talks about TVS Motors, because over the last 1 year, the stock has sort of blurred into the background a little bit. Tell us why you've put TVS Motors on your list.
Well, clearly what you said is right, that for the last about 2 years, the company was not reporting good set of numbers. But if you see the last about 3 to 4 months, some of the product launches which they've done, the acceptance has been exceptionally good. They have presence across the spectrum. And the last about 2 or 3 monthly numbers, the growth has been about 35 to 40%, whereas most of the other big companies like Hero Motors and Bajaj Auto are struggling.
Why? What is this company doing differently?
We think that the target is extremely good. Like the two-wheelers, they have a presence in the smaller scooty segment. They've come out with extremely smart models of the motorcycles, and their production facilities, between South India and North India, they have a good balance. So we think that because of this, they are able to come up with newer products, and the margin part is also they are relatively better placed.
All right. So tell us, in terms of the stock right now, where you expect it to go. It's at 80 at this point. Where do you expect it to go?
We have set a target of about 115 for the stock. What market likes is the kind of growth over the next 1 or 2 years. And in terms of growth, we are looking at about 35 to 40% kind of earnings growth for next 2 years, which is not going to be the case with Bajaj Auto or Hero MotoCorp.
All right, so literally the dark horse of the auto industry, the TVS Motors, that's the second recommendation. That's on your screen. Remember, the first stock we talked about was Divis Lab. And every time Hemang comes back into the studio, we're going to revisit these recommendations and see how they're doing. Let's answer a few questions. Avijit has written in, he has 26 shares of Sun Pharma, which he bought at 595. He wants to know if we should hold on to that stock. Now, again, very strong numbers coming out from Sun Pharma, boosted, of course, by the performance that it got from Taro this time. What's your call on Sun Pharma? Hold on to it?
Absolutely, doing very well. The recent numbers were very impressive, and they've also upgraded their guidance. So we think that one can easily hold on to Sun Pharma with a target price of about 680 rupees.
But given the phenomenal performance we saw from Sun Pharma over the last year or so, more than a year in fact, how long do you expect it to continue in this manner?
Well, it has surprised everyone. I think last 5 years it has been the best performing stocks in the markets. Operationally also, they are having highest profit margin of more than 40%. So as long as the management delivers, we can continue to hold on to it.
All right, we'll continue to hold on to that stock. Next question, Satish has written in. He has 50 shares of Bajaj Finserv, which he bought at 860 rupees. He wants to know if he should hold on to that stock. Finserv on your screen right now is at about 682. Now, lending has been an impressive business. I'm worried about life insurance. It's been a very, very tough year for all life insurance companies put together. And Finserv has, of course, stake in the Bajaj life insurance business. What's your call on this stock? He's lost a fair amount of money already.
Yes, it's been a difficult business, but I think on the lending part, they are doing very well. They have a decent corpus. And on the general insurance and the life insurance, we think that there could be a bit of a slowdown. But overall, given the low penetration that we have, I think there is a scope for a good growth going forward. So overall, on a sum of part basis, we think that it's very attractively priced. So one can expect about 30-35% kind of an upside from current levels.
How long is it going to be before we see that 30-35%?
I think about 12 to 18 months is a reasonably good time frame.
And let's remember that he got in at 860. So for him to recover his investment, it's going to take some time. So what sort of a time horizon would you like to give him?
I think he can hold on to it for about 12 odd months, and if he gets somewhere close to his price, definitely he could review the stock at that point of time.
We have one more portfolio that we can look at this point. We're going to try and rush through it. Pratish has written in. He sent us his entire portfolio. He tells us he's a long-term investor. Starts off with 40 shares of Asian Paints, which he bought at 480 rupees. It's trading around that same amount. What would you recommend he does? Hold on to it?
Well, yes, good company. The rural presence is very strong, so we think that there's going to be a good growth in the next 1 or 2 years. He can hold on to it.
62 shares of Dabur India at 146 rupees. Outlook on consumer stocks have been a little bleak. Hold on to Dabur?
Yes, I think given the kind of product basket that they have and the rural presence, he can hold on to that one as well.
100 shares of ITC at 309 rupees. Is it possible to go wrong with ITC at all?
I don't think so, but you might have to kind of see the sideways movement for an extended period of time. But overall, we think that it's a good stock to be in.
All right, he has 2 shares of BHEL, which he bought at 254 rupees. I'm going to save some time for BHEL. Luckily for him, it's only 2 shares. But it is BHEL, and there are a lot of viewers who are holding BHEL at this point. Now, given the political uncertainty we are seeing going forward into this year, how much hope do we have for BHEL in particular? Because unlike an L&T or unlike the other stocks we talk about, it hasn't shown us any positive news over the last year or so.
Yeah, I think in the current scenario, there is not much of visibility about the growth. The power sector is going through a lot of pain, and it is a concentrated portfolio. 85% of the revenues is coming from the power sector, plus it's a PSU tag, so it will have a lower valuation. So in that kind of a scenario, I think definitely it makes sense to exit out of BHEL, move into L&T or any other stock which is looking much stronger.
All right, so exit out of BHEL and move into L&T. It's time for us to take another break, but the big treat on the other side when we come back, we'll look at Hemang's own portfolio. We'll find out how he managed to beat the markets and make 15% as a return. We'll find out how he did it. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemang Jani is with us in the studio helping us make money in the long term. Let's take a look at Hemang's own portfolio. Now, on the 4th of January last year, Hemang designed a portfolio for us on the show. We revisit the portfolio every time he's back in the studio. So far, it's made an overall gain of 15.27%. Over that same period, from the 4th of Jan till today, the Nifty is up about 0.5%. So he has managed to beat the Nifty by 14.5%. Thank you for that strong portfolio. I want to give our viewers a recap of the stocks you've picked for us. There's TCS, that's up 66% since we bought it. Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Zee Limited, Aurobindo Pharma up 145% since we bought it. Tata Coffee, and that brings us to the end of that portfolio. I want to talk to you about Grasim because we don't talk about it that much. It's down 23% since we bought it. And we talked about the fact that consumer stocks are a little weak right now. Tell us why Grasim is still in your portfolio and why you believe it's a stock to hold on to.
Well, Grasim has about 75% of the revenues coming from the cement business and about 25% from the commodities. And we've seen that both cement and commodities are going through a lot of pain. And again, it's a holding company. So the market is not giving the right kind of a valuation to a holding company. But we think that, there is going to be an uptick in that entire material space and the cement in particular in the next about 12 to 18 months time. And the sector has already bottomed out. So we think that it makes sense to hold on to something like a Grasim for the next about 12 to 18 months time frame.
All right. Also tell us about Reliance Industries right now for all of our viewers who are holding on to it. Given all of the action we've seen with the company over the last 1 week, whether it's tussles with the Delhi government, whether it's the bidding that they've done for the 2G auction as well, where do you see the stock going forward?
Well, clearly this recent development was a bit of a setback, but we think that the price hike is likely to go through. If you look at the statement which has come out from the oil ministry, if that price hike goes through, definitely it would be a big trigger for the Reliance, because in the next about 2 years time there is going to be incremental revenue of almost about 32,000 crore out of that. So we think that at this point of time it makes sense to hold on to Reliance for next maybe 2 years or 3 years.
Does it make sense to add more Reliance at this point, or should we wait for clarity on this price hike?
Well, we think that there is going to be some kind of a volatility because of the elections and because of this entire controversy, but we have seen the worst, so it makes sense to add to Reliance at this point of time.
So add every time we see it dip a little bit?
Yeah, and the company has completed the buyback around about 750 odd levels, so I don't think there's a case for too much of a pullback beyond that.
All right, so positive for Reliance in the long term. Buy up that stock every time you see it correct a little bit. That brings us, unfortunately, to the end of the show. But I am going to give you a recap of the stocks we talked about in Hemang's portfolio. TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Zee Limited, Aurobindo Pharma, and Tata Coffee. If you have any questions about the portfolio, you can of course send it to us on our email ID. We'll ask Hemang to come back into the studio and answer your questions for you. Thank you so much for spending time with us. It's always a pleasure to have you in the studio. You'll find a copy of this show on our Facebook page, and you can reach me personally on Twitter. Thanks so much for watching.